when somebody has delivered even to the last comma of the provisions, the Finance Act, and then you now have to discuss after him, you know, it becomes a little bit more difficult. But he has gone through all of that. I will just run through what I have in 15 minutes so that I'll give my own perspective. I've been part of all of the Finance Act process, and of course the process of signing them into law from 2019 till the 2022 that is hanging now. We believe and we are hopeful that it will be signed after the ones that are a little bit being debated as a result of consultation. So I don't know whether we really need that consultation. Okay, so, but of course, the angle I'm going to be looking at the topic is to try and delve into some of the reasons behind some of those provisions. Why will government just come up with a particular focus, you know, in a particular year that this is the direction, and then why are they focused on those areas? So that is the angle I want to just highlight instead of going through the specific provision, which I may just mention one or two things in response to what Professor Olaleye has mentioned. Yes, so we can see all of those provisions have been made, and I will not dwell on that. In the 2019 Finance Act, you know, was the first one, and it's actually sort of realign the Nigerian tax law, okay, with the current business realities. We have not had any amendment for upward of 30 years prior to the Finance Miscellaneous Taxation Provision Decree of, is it 1999? 1998, yes, 1998. So 2019 came, and then we're very glad to promote fiscal equity, introduce incentive that targeted businesses, and that was why some of those provisions were made at that time. So there was increase in the VAT rate, introduction of the SEP rules, as Mr. Olaleye already explained, exemption of small businesses from CIT and VAT on their sales, which is still subsisting. If you are not, if you don't want to be, because even if you are a small company and you really want to take the advantage of the VAT, it is allowed. Elimination of double taxation issues, and of course, the very controversial excess dividend tax issue at that time was somewhat or somehow resolved, you know, by the 2019 Finance Act. And I've had, of course, to try to explain to some judges, particularly members of the Tax Appeal Tribunal, and they really don't understand what those excess profit tax, as far as they are concerned. You are paid dividend, and therefore the law says when you pay dividend, your tax must be 30% of that dividend minimum. So as far as they are concerned, that was the provision. But we all know that it's much more than that. We need to look at the details. We need to look at where the dividend is coming from, retained or not retained earnings, and all of the analysis that you need to do to, you know, to dig into what we call tracing the source of the dividend. They were not ready to go into those calculations after becoming a member of the tribunal. Okay, so, but I think to a large extent, all of those have been taken care of by the 2019 Finance Act. Now, the focus of the 2020 Finance Act was to, you know, was enacted during the COVID. I mean, it was a response to the COVID era. Okay, and of course, we know that several countries actually made several provisions to respond to the COVID-19 pandemic. And so, specifically, it was targeted at stabilizing business economy from the drastic impact of the pandemic at that time. And so, no new taxes were actually introduced, other than some incentives, incentives for donation, for, you know, supporting the pandemic and all that. So So it was at that time that we have the creation of intervention fund. We had the reduction of the duty for motor vehicles, buses and trucks, okay, which was quite high at the time, 40/40 for both duty, and it was reduced to 5% and 40% as at the time. Then the provision to enable tax recovery on donation towards the pandemic was specifically inserted into the law. So it was a basic response to the pandemic. We also had exemption of the renters rent from VAT, definition of land and building. Okay, and of course we know that interest in land, extends to not only when you own land, but even if you own the building or you have interest in property by way of a landlord or having that type of interest. Is still part of interest in land, including easements, which are not too common in Nigeria. Again, at that time, they also look at the FTZ enterprises free trade zones, okay, now required to file returns. Yes, I know that Mr. Adebiyi was of the view that that tends to take away the huge benefits that they were supposed to enjoy, which was to be assumed that they were outside of the country, more or less, as if they are territory. But if you look at definition of what constitutes a territory, free trade zone does not constitute a territory that can be deemed as a country, and so we cannot remove them from Nigeria effectively, and any planning that is being done by a serious government must still take into consideration whatever operation that is happening in the free trade zone, and that essentially was what resulted into the watering down of the incentives. The World Bank was always on the neck of the government to reduce tax expenditure. And when you talk about tax expenditure, we refer to all those incentives that have been granted by way of free trade zone, by way of capital allowance, and all of those should actually be added to tax revenue considered. So if the tax authority are determining how much revenue in terms of tax are collected, in some countries, those are part of the components of revenue collected, those tax expenditure. So it became very relevant that you must know how much is really being lost or how much is being considered by the operation of the free trade zone. And of course, we also want to know the personalities and all of that. There has always been question as to how are they supposed to be subjected to tax, even as of now. It is still very unclear. Somebody has said that last week that if I said I'm in the free trade zone and I said into the custom territory, you can still be treated as export. Do we agree that if you are in the free trade zone, either you sell to Ghana or you sell to Nigeria, export is export? But that's not what the law recognizes, and which I agree with. You cannot be selling into Nigeria and you're saying you're exporting, okay, because you are more or less part of the Nigerian territory. I know that there will be several questions around those who are in free trade zone and whose products are targeted at the Nigerian consuming public. I'm not going to mention anyone now. Then, of course, the drivers around the 2021 Finance Act, was basically to enhance local revenue generation, among others. Over 12 laws were further amended using the Finance Act. Mr. Adebiyi has mentioned the issue around the reintroduction of the capital gains tax on shares and equity, and that was to be amended in the 2022 to widen or to remove the lacuna around the rollover relief provision that was not properly, inserted into the 2021 provision. Because the way the provision is now, I can say confidently, there's no way any of my clients will pay any CGT on shares if you tidy it up properly, which means I can buy shares, I can dispose my shares, okay, I can sell it at the new price, and then, you know, before the end of the year, you have to reckon with my last cost, not the original cost or the base cost, which is supposed to be the provision under Section 32. Yeah, no, not 32 now. Under Section 18 of the Capital Gains Tax Act that has to do with rollover relief. But the Finance Act of 2022 now sought to, you know, reflect the impact of the base cost. You know, you have to ascertain so that if you dispose of, if you acquire share in January at 100 million and you sell by March at 200 million, you already have a gain of 100 million, but you invest the 200 million and buy another share for 200 million, which you eventually sell maybe towards December within the same year. Okay, ordinarily you should be enjoying tax relief, but if you do that without reinvestment, the existing provisions only recognize your last cost instead of your base cost. Okay, and that was what the 2022 Finance Act tends to quickly rescue, so that the provision can actually be implemented as far as shares are concerned. Then again, going to the 2022 Finance Act, the focus of government, you know, was, which is yet to be signed anyway, was focus. The focus was healthcare, infrastructure, climate change, green growth, and then for sustainable environment. And that was why you have some of the provisions that we saw in the bill, the provision to amend Section 89 of the Stamp Duties Act. You know, the bottom line there is just revenue generation and the fact that the reach of the revenue was to be expanded. I know a lot of states don't agree, where local government will now take part in the share of stamp duty, which was exclusive to states. And the sharing under Section 161, Dr. Olaleye is the lawyer, so I have to be looking at it if I'm putting any law. Of the Constitution that has to do with the stamp duties revenue, which was exclusive more or less for the states, but this provision tends to extend it to the local government, and of course several states, particularly Lagos, who has how many local governments in Lagos State, and then some other small local governments that are recognized in the Constitution. So if you're going to be sharing the stamp duties, I mean, sorry, not stamp duty now, the electronic money transfer levy, on the basis of local government, you know, a lot will also be lost from that analysis. Lagos will definitely be getting something smaller than what they will have hoped to, because it's going to be based on 35% for local government. So I know a lot of those consultations were some of the things that resulted in the hanging bill on the 2022 Finance Act, and a couple of changes that were expected to be made to the FRS Establishment Act, which were also being contested at some quarters. But of course, like Mr. Olaleye said, we know that there are specific significant provisions that was targeted at green growth, particularly when it comes to gas flaring, and they wanted to incentivize the company that reduce the level of flaring of their gas, and those who continue to flare will pay higher tax at 50% as opposed to the normal 30% under CETA. So those are, we need to understand that for any finance act to be passed, first the government has to have the basic, you know, objective that they tend to pursue in a particular era and in a particular year. And of course, we also have demand from international financial institutions who, you know, have advanced so much credit to the country and who are also hopeful, just like taking loan from a bank and then the bank wants to be sure that you have your business plan cut out, you are sure that you'll be able to generate enough revenue and that the business will function. The same thing applies to a country like Nigeria, who is heavily indebted. The financier wants to know where the funds will be coming from. They want to look at possible areas, what tax expenditure can be stopped now, what additional revenue, regardless of whether it's going to be popular or it's going to just be taken. So we cannot run away from all of the achievements as. Okay. 15 minutes more. Oh, okay, thank you. So in 2 minutes, I'll just quickly run through the achievements, the diversification of the Nigerian economy from the mono economy, largely dependent on oil. We have information that in the last financial year, which is the fiscal year of government, FRS was able to generate over 10 trillion in revenue. And if you look at the profile of that, the bulk of it will be from non-oil. I'm not sure, but I think that was where the bulk of the revenue is coming from. And that cannot be unassociated with the impact of the Finance Act, particularly on automation. A lot of companies that are paying just pittance and now have no way to hide. The tax authority are appointing agents of, the banks are now agents, and the current controversy around that now is if I'm an agent of government of FRS to withhold VAT, and I'm also dealing with another agent appointed by FRS to withhold VAT, who has the priority? That provision is not in the law. Okay, so you have a bank that has transaction with an oil company. The oil company does not want the VAT to be withheld. The bank says they have obligation. I'm sure FRS are also, they are going to look at that. So we cannot run away from those benefits. We have regular update of obsolete laws, in expansion of the Nigerian tax net, alignment of tax provision with global best practices, and of course we have elimination of double taxation, which we have mentioned, particularly around the dividend tax issue. Crisis intervention was made possible by the Finance Act. Incentive for targeted businesses is now very easy. We clear promotion of equity, removal of minimum tax exemption for companies with at least 25% foreign equity. That is a clear removal of inequity. Reduce the compliance burden and instead of taxation. Those are basic achievements. As I move on quickly to some of the pitfalls, the timing of the enactment of the Finance Act and the fact that sometimes people talk about retrospective effect, where the provision becomes effective. If the Finance Act of 2023 or 2022 is passed the way it is now, some of those provisions will apply on your 2022 account, unfortunately, and that is because Nigeria operates what we call the preceding year basis of assessment, unlike what we have in places like UK, where assessment for companies are usually on actual year basis. But that is what we have. Again, we have contentious amendments, such as the removal of educational institution. I want to support Mr. Latoye on that. But again, I work for so many educational institutions, and only very few of them. Before you become very profitable as a university, you have to have the number of students. You have to have operated for so many years. Probably, I don't see any private company being profitable, mostly in the life of the promoters. They are mostly public service. Okay, so it may not be as significant as we have seen it. But looking to the future, we expect to formalize the informal sector. The finance has to focus on that. What can we do to really bring in the informal sector into the formal sector? Because if you go deep into the informal sector, quite a number of them are actually formal. If you go to Alaba market, there are companies that are generating billions, and they are within the informal sector, paying maybe 5,000 as levy a year. And of course, we are still looking forward to a total overhaul of the Stamp Duties Act. A lot of people are making claim and laying claim to the revenue from stamp duties now, even without understanding what it is. You know, so many people that are associated with stamp duties don't have the understanding at all. Some banks still feel that you don't have to stamp to the full value of the security and all that. Some people don't think that it's even compulsory, regardless of section 13 or 18 as it is. So these are issues that we believe that the Finance Act will address in the very near future. That will be my discussion of Mr. Adebiyi. Thank you very much.
Okay, basically, ladies and gentlemen, please can you wave if you are tired of these sessions? Just wave at me so that I can close everything now. Okay, that presupposes that we are enjoying it. We still have 2 more to go. And after that, I will be calling one of our senior council members to say 1 or 2 things. And before then, while someone was trying to introduce all panelists there, he actually introduced one Oga Madam. And he did say that when the Madam will come, there will not be need for us to go through the profile again. And I want to confirm to you that I have her live and direct. Those as well was trying to tell us that maybe she will be joining us on the through the Zoom. I noticed some people were still talking at the back. Okay, thank you. We still have all our members here, so let's reduce the noise over there. So I'll be bringing on board Mrs. Adebiyi, who is a senior partner from PwC. She has promised me to spend 7 minutes, and she promised to give me money if she spent 1 minute on top of that 7 minutes. Please appreciate her.